All right, let's get practicing in QuickBooks Online. Grab the link below so that you can follow along. All right, here we are in the QBO gym, and the QBO gym is a place where there are just a set of exercises that help simulate real life scenarios that you may encounter as a bookkeeper. And every single month we have it broken down into 4 different categories, and within each category is a set of exercises for you to complete. So today we are going to be working in the cool down section for June. At the top here, we have a video that talks about what's going on in Craig's world that month. He is, of course, our fictitious business owner. A little bit further down is a quiz that relates to the video. And then further down, we have a set of exercises that are within this section. So today we are going to be practicing in updating inventory. Now, again, you are going to have to be in the same session of the sample company that you used for the previous exercise in the cool down section. If you haven't completed that one yet, go ahead, go back to that one, reconciling the bank accounts. Do that first and then come back to this one. So our scenario for today is that it's the end of the month, so you need to grab the bank statements and reconcile the accounts, which we did in the previous exercise. You'll create a P&L and balance sheet for Craig, but before you do that, you'll want to adjust the balance sheet inventory value to accurately reflect his cost of goods sold and inventory on hand. Remember, this is periodic inventory, so we're not relying on QBO to constantly track for us. So he had to do a count of what inventory was left over this month, and he provides you with a report. So the first thing we are going to do is focus on the inventory volume. Or formula, not volume. Uh, when calculating the cost of goods sold, which is also again known as COGS, we use the formula starting inventory value minus the ending inventory value plus purchases equals COGS. Now, in this scenario, Craig's start inventory was 0. So, what is the ending inventory value? Now, because this is periodic inventory, the only way that we know is for Craig to count manually. He did so and discovered that he has 13 ducks left and he has 2 lawnmowers left. The ducks were purchased for $1.90 each and the lawnmowers were purchased for $120 each. So the formula is 13 times 90 or $1.90, the ducks, and then 2 times 120, which are the 2 lawnmowers at the 120 price, they equal $264.70. You multiply these first individually and then add them together, and you get the $264.70. So for the purchases, you can look that up in QBO, but luckily you previously set up an account to show you exactly that. So to get started, we are going to go to Accountant Tools and then click on the Chart of Accounts. Here I am on the reconciliation page. This is where I left off from the previous exercise. That's why it's showing this way. So Accountant Tools, you go click on that button and then under Quick Links, click Chart of Accounts. And we are going to look for purchases retail account that we had previously set up and run the report. So let's take a look for purchases. Scroll way down. And actually, I'm just going to do a search. Purchases retail, there it is. And then you're going to go ahead and click on Run Report. I should have just done a search to begin with. It's so much easier than just doing all the scrolling. Okay, and then you will see what is the resulting account drill down quick report, or it used to be known as transactions list if you're familiar with this from previously. Now it's called the account drill down quick report. And this shows all the transactions for this account since 90 days ago. So you will see that the total is $828, and this is what we're going to use in our formula. In a real life scenario, well, let me go back first. Scroll over here. Mine does not fit all the way in the screen, but here is that amount, that $828. In a real life scenario, you may need to adjust the dates to the period that you're looking for by clicking on the Since 90 Days Ago drop down and selecting or entering a date range. That is what you need. So that's this one right here, Since 90 Days Ago. Just click on that. There's other ranges here. And then you can also make custom dates if need be. So remember this $828, we will need it for the next part. We are going to be creating a journal entry for this. So this is to add both the inventory retail account, which holds the value of the current inventory and the cost of goods sold. So step one is getting ready for that journal entry. We're going to click on the plus new button and then select journal entry, plus new, other, journal entry. And then we are going to go ahead and complete it. In the journal number field, we're going to enter inventory adjustment and then the month. Since this is part of the June gym series, we're going to go ahead and put June. So here, inventory adjustment, June. It's always a good idea to name these journal entries in a way that you can easily refer back to it and understand what it's for, if necessary. And then on the first line under account, we're going to select inventory retail. And on the debit column, we're going to put $264.70. Remember, the debit column is for the destination of the funds. So go here first and inventory retail, and we said it was $264, not 300, $264.70, I believe. Yep, $264.70. Do you remember how you got to this number? This is part of that formula, that inventory formula that we did here before. I'm going to go back to it really quickly. Where are you? There it is, inventory fund. Remember, it is the 13 ducks times $1.90 plus what is the calculation for the 2 lawnmowers times 120. That is that value. That is the ending inventory value. So that's where that number comes from. On the second line, we are going to be selecting the purchases retail account. And in the credit column, we're going to do the $828, which we had gotten again from this report here. We are going to go ahead and put that in there. So purchases retail, there it is. And it's trying to automatically equalize the columns because remember debits have to equal credits, but we need to adjust this. So it's the 828. Keep in mind that the purchases retail account is really just a temporary account used to hold funds until we go through this particular process. When we're finished here, it will be zeroed out as the funds are distributed to the other 2 accounts. And the other account that we are going to be adding on that third line is the cost of goods. So we're going to do cost of goods sold. There it is. And look, QBO has already made that calculation for us because, again, debits have to equal credits. You can see it right down here. So it's automatically making that calculation for us. And then you are just going to go ahead and save and close, which is the green button down here. Go ahead and click that. And you have adjusted now your inventory. If you have any questions about the QBO Gym, just click on the link below and be sure to leave this session of the sample company open as you will need it for the final video in this cool down section, which is all about running reports. And I will see you in that video.